What if you had a trading analyst sitting beside you before every single trade? Someone who never gets tired, never gets emotional, never revenge trades, never gets FOMO, and never tells you what you want to hear. Now imagine, that analyst could read your trading journal, analyze hundreds of your past trades, find the setups where you actually make money, identify the conditions where you consistently lose. And then, before you enter your next trade, it asks you one question. Does this trade actually match your edge? That's what AI can do for traders today. But there's a problem. Most traders are using AI completely wrong. They're asking, should I buy Bitcoin? Where will USD go? Is NASDAQ going up tomorrow? Give me a 90% winning strategy. That's not using AI. That's outsourcing your brain to a chatbot, and that's dangerous. Because AI doesn't know what the market will do next, neither do you. Neither does some guy on Twitter with a Lamborghini and a rented office. But AI can do something far more valuable. It can help you understand your own edge. Think about that. You might have taken 300 trades over the last year. You probably remember your biggest winners. You definitely remember your biggest losses, but you probably don't know the exact conditions where your strategy performs best. AI can find patterns that your memory can't. Maybe your best trades only happen during the New York session. Maybe your win rate collapses after 2 consecutive losses. Maybe your best setups have a specific risk to reward profile. Maybe you make money when you wait for confirmation, but lose money when you enter early. You may already have a profitable edge. You just don't know where it exists, and that's where AI becomes interesting, not as a crystal ball. As an analyst, your first job is incredibly simple. Stop asking AI, what should I trade? Start giving it your actual trading data, your entries, your exits, your setup type, your session, your risk, your result, your reason for entering, your reason for exiting. Then ask it to find the patterns you can't see. Because here's the uncomfortable truth. Your trading history is probably telling you exactly why you're losing. You're just not reading it, and in the next part we're going to build the first layer of this AI trading system, the part that can turn a messy trading journal into a personal database of your actual edge. No prediction, no magic, just your own data finally being used against your own mistakes. I started with the trades I had already taken, not the perfect ones, not the trades. I wanted to show people everything, the winners, the losers, the stupid entries, the trades I closed too early, the trades I held too long, and the trades where I knew I was breaking my own rules but entered anyway. I fed the AI the data from hundreds of setups: entry, stop loss, take profit, direction, market session, risk, reward, setup type, and most importantly, what happened afterward. Then I asked it to find patterns I couldn't see. The first result was uncomfortable. My biggest problem wasn't my strategy. It was selectivity. I was taking too many average setups. They looked good enough to enter, but they weren't good enough to risk money on. That's an important distinction, because trading isn't about finding a setup you can trade, it's about finding a setup worth trading. So I built the first layer of my AI system, the trade score. Every setup gets points. Market structure gets 20 points. Liquidity gets 15. Entry location gets 15. Risk to reward gets 15. Session timing gets 10. Volatility gets 10. An economic event risk gets 15. That's 100 points. Now imagine a setup appears. The market structure is bullish, 20 out of 20. Liquidity is clean, 15 out of 15. Entry is excellent, 14 out of 15. Risk to reward is 3 to 1, 15 out of 15. But there's a major CPI release in 20 minutes. Suddenly, the setup loses points. Maybe it drops from 84 to 69. And the AI says, wait, that's important. Because the chart didn't change. The setup still looks beautiful. The only thing that changed was the information around it, and that's exactly what humans tend to ignore. We see an attractive setup and immediately want to press the button. The AI doesn't get excited. It doesn't care that we've been waiting for 3 hours. It doesn't care that the last trade lost. It doesn't care that we desperately want to make the money back. It only sees the criteria. But then I discovered something even more important. The AI could score a setup perfectly and still be wrong. That was the moment the experiment became serious. Because if I treated the AI like a prediction machine, I would eventually blow up. So I changed the entire objective. The AI wasn't allowed to say, this trade will win. It could only say, this trade meets the rules we defined. That's a massive difference. Think about it. A doctor doesn't say, this patient will definitely recover. A pilot doesn't say, this flight can never have turbulence. And a professional trader shouldn't say, this trade cannot lose. The goal isn't certainty. The goal is controlled decision-making. So I added another rule. Every approved trade had to have a predefined invalidation point. If the market reaches that level, the trade is wrong. No arguments, no moving the stop, no, I'll give it a little more room. The AI doesn't negotiate, and neither do I. Then came the most important test. I took the AI through my historical trades and simulated what would have happened if I had only taken him the highest scoring setups. And the results were surprising. Some of my biggest winners would have been rejected. At first that looked like a failure. But then I realized something. Missing a winner isn't necessarily a problem. Taking a bad trade is, because the objective isn't to catch every move, it's to build a process that survives hundreds of decisions. That completely changed the way I looked at AI trading. I wasn't building a machine that could predict markets. I was building a machine that could protect me from myself. But there was still one massive problem. Backtests can look beautiful. Historical data doesn't feel fear. It doesn't hesitate. It doesn't revenge trade. Real money does. So I needed to take the system out of the past and put it in front of the live market. And that's when the AI had to face its first real test. No perfect hindsight, no edited charts, no second chances. Just one question: when the next setup appear, would the AI actually tell me to trade? The first live setup appeared on a completely normal trading day. No major announcement, no crazy volatility, just a clean setup forming on the chart. My first instinct was immediate: take it. But the AI didn't agree. It gave the setup a score of 68. Wait. That one word was frustrating because everything looked right. The structure was clean. Liquidity was sitting exactly where I wanted it. The entry was reasonable. The risk to reward looked attractive. So why was the score so low? I opened the breakdown. Market structure 19 out of 20. Liquidity 14 out of 15. Entry 15 out of 15. Risk to reward 15 out of 15. Session timing 8 out of 10. Volatility 6 out of 10. Economic risk, negative points. There it was. Volatility was increasing while a major economic event was approaching. The chart looked perfect. The environment wasn't, so I waited. And then the announcement hit. Price exploded. The setup moved exactly where I originally expected. For a moment, I thought the AI had failed. I had missed a winning trade. But then something happened. The market reversed almost immediately. The exact setup that looked perfect before the announcement became completely invalid. And suddenly I understood what the AI was actually protecting me from. Not losing trades, bad conditions, that's a much more important distinction. A good strategy can still perform badly inside the wrong environment. And this is where AI becomes interesting. Not because it can magically predict the next candle, because it can process more information than a human trader usually wants to process before every entry. But I wasn't satisfied. One trade proves nothing. So I kept going. Second setup, 74, wait. Third setup, 87, approved. Now things got interesting. The AI approved. The third trade, but it didn't just say buy, it gave me a complete plan. Entry, invalidation, target, maximum risk, and the exact conditions that would cancel the trade. That last part was critical, because most traders create a plan before entering, then change the plan after entering. The AI didn't allow that. Once the trade was approved, the rules were locked. No moving the stop, no adding because price went against me, no closing early because I became nervous. No revenge trade if it lost. The system was designed to make emotional decisions more difficult. And then the trade started moving against me. 5 minutes, 10 minutes, 15 minutes. My brain started doing what it always does. Maybe I should move the stop. Maybe the setup is still valid. Maybe I should give it more room. The AI had one answer: no. The invalidation level hadn't changed, so neither did the plan. Eventually, the stop was hit. Loss, no drama, no revenge, no improvisation, just a controlled loss. And that's when I realized something that completely changed the experiment. The AI didn't need to win every trade. It needed to make sure one losing trade couldn't ruin the next 20. That was the real edge. Then I started tracking something even more important. Not just whether the AI won or lost, but whether its decisions were actually better than mine. Because if AI was going to control my trading, it had to prove one thing: not that it could predict the market, that it could improve my decisions. So I created a second data set. Every trade I wanted to take, every trade the AI approved, every trade it rejected, and what happened next was the most surprising part of the experiment. The AI started rejecting some of the trades that looked the most exciting, and those were exactly the trades I wanted to take the most. That made me realize the biggest advantage of AI trading might have nothing to do with AI. It might simply be having something that can tell you no, when your brain really wants to hear yes. But there was still one final test. 30 trades, real-time decisions, same rules, same risk, no changing the system halfway through. And this time I wasn't interested in how much money the AI could make. I wanted to know something much harder. Could an AI-assisted trader actually become more consistent than the human behind the screen? 30 trades, that was the test. No changing the rules. No changing the risk. No changing the scoring system just because the results weren't going my way. Every setup went through the same process. The AI scored it. The AI explained it. And then I either took it or stayed out. The first 5 trades were almost boring. 2 winners, 2 losers. One trade the AI rejected that eventually became a huge winner. At first that looked like a problem, but then I remembered what the system was actually designed to do. It wasn't built to catch every move. It was built to improve decisions. That distinction changed everything. Trade number 6 was a perfect example. The setup looked incredible. Strong trend, clean liquidity, excellent risk to reward, everything I normally wanted. The AI scored at 92, A+, so I took it. The trade won, then came trade number 7. Same market, same strategy. Almost the same setup, but the AI scored at 46. I wanted it anyway. This was exactly the type of trade I would normally take. So I asked the AI one question. Why are you rejecting it? Its answer was simple. The setup was good. The environment wasn't. Volatility was abnormal. Liquidity was messy. And the reward wasn't large enough to justify the uncertainty. So I stayed out. The trade later moved exactly where I predicted. And for a moment I felt stupid. I had been right, but I hadn't made money. That's when I understood one of the hardest lessons in trading. Being right and making money are not the same thing. You can correctly predict the direction and still make a terrible trade. Because the question isn't only, where will price go? It's, is the potential reward worth the risk right now? That became the core principle of the experiment. By trade number 15, something else started happening. I was taking fewer trades, but I was thinking less about each individual trade. That sounds strange, but it made sense. Before the AI, every setup created a debate. Should I enter? Should I wait? Is this FOMO? Is the trend changing? Maybe I'll miss it. Maybe it'll reverse. My brain was constantly negotiating. Now the process was mechanical. Score the setup, check the conditions, define the risk, execute or don't. The emotional argument was disappearing, and that might have been the biggest benefit of the entire experiment. Not prediction, not automation, decision quality. But then trade number 21 almost destroyed the entire experiment. The AI approved the setup. I entered, and within minutes, the market moved violently against me. The stop loss was hit, a full loss. Then another setup appeared. The AI rejected it. I wanted revenge. I wanted my money back. And for the first time, I realized the AI couldn't control the one thing that mattered most, me. It could score trades, it could analyze data, it could calculate risk, but it couldn't physically stop my hand from clicking buy. That was the real test. Because technology can improve your process, it cannot replace your responsibility. So I created one final rule. If I took a trade the AI rejected, that trade would be recorded as a system violation. Not a normal loss, a process failure. And suddenly the experiment became much more interesting. Because now I wasn't only measuring how much money the AI could make, I was measuring how much better it could make me. 5 trades remained. And the final results were about to reveal whether this entire idea was actually useful or just another overhyped AI experiment. The final 5 trades were the ones I cared about most, because by this point the experiment wasn't about whether AI could predict the next candle. I already knew it couldn't. The real question was whether it could help a human trader make better decisions. And the results were surprisingly clear. The AI didn't win every trade. It didn't even approve every winner. But something much more important started happening. The bad trades were disappearing. The random entries. The revenge trades. The setups I took because I was bored. The trades where I moved my stop loss. The trades where I risked more than planned. All of them became harder to justify. And that changed the entire risk profile of my trading. The AI wasn't a crystal ball, it was a filter. And that distinction matters. Because the biggest problem with AI trading is the fantasy that you can build a machine that knows where the market is going. You can't. Markets are not a video game with predictable rules. They're constantly changing systems driven by millions of decisions. Economic data, liquidity, institutions, algorithms, news, fear, greed, and randomness. No AI can remove uncertainty, but AI can help you deal with uncertainty. That's where the real advantage is. Imagine having someone next to you before every trade asking, where is your stop? What's the reward? What invalidates the setup? Is there a major event coming? Are you entering because of your system Or because you're afraid of missing the move? Those questions sound simple, but asking them every single time can completely change your trading. And that's what my AI system was actually doing. It wasn't making money for me. It was making bad decisions harder to make. That's a much more realistic use of AI. So if you're building your own AI trading system, don't start with predict Bitcoin. Start with analyze the setup. Don't ask, will USD go up? Ask, does this trade meet my rules? Don't ask, give me a winning trade. Ask, tell me every reason this trade could fail. That's how you turn AI from a prediction machine into a decision system. And there's one more rule I would never remove. The AI doesn't get the final word, I do. Because the moment you blindly follow an AI, you've simply replaced one emotional trader with another form of blind decision-making. The goal isn't to surrender your judgment, it's to improve it. Use AI to process information. Use AI to challenge your bias. Use AI to calculate risk. Use AI to review your trades. Use AI to find patterns you might miss, but never confuse analysis with certainty. And if you remember only one thing from this entire video, remember this. AI won't make you profitable because it can predict the market. It can make you more consistent because it can help you control the trader behind the screen. That's the part nobody talks about. The biggest advantage of AI in trading might not be knowing what to trade. It might be knowing what not to trade. And sometimes the most profitable decision an AI can make is simply telling you, don't. Because the market will always give you another setup, but your capital doesn't have to survive every one of them.